Well, the Dow and the S&P, they rose on Tuesday after strong earnings and upbeat outlooks from top manufacturers. However, Apple slid ahead of its results with the Nasdaq down. However, in post-market trade, the stock recovered on strong revenues. Also, to add to the data, economic data took a backseat to earnings news. Single-family home prices, they rose for the first time in 10 months in an encouraging sign that the battered sector was starting to stabilize. Now, in closing bell, the Dow was up a good 74 points. The S&P 500 index was up 5. And the Nasdaq, because of Apple, slipped about 9 points.
Asian markets aren't doing too badly. You can say that it's a bit of a mixed bag, but the bias is towards the positive side, with most of the indices either flat or in the green. So we may open with a bit of a green in today's session, though the pressure may continue until tomorrow's session because of the expiry that is on right now. But for now, at least in today morning's trade, in all probability, we should be doing well on the Nifty and specific stocks as well. But let's get in a word for the global markets. And the president of Heritage Capital LLC joins us on the line from Connecticut. Paul, good to have you. Thanks so much for joining in. What do you make of the slew of clues that have come out over the last 2 or 3 sessions, not just particularly yesterday? And in light of that and the earnings season that is shaping up, how are the U.S. markets looking in particular?
And thanks for having me back. Well, I mean, first of all, the news today is clearly going to be Apple, and tomorrow morning, for at least the first 4 hours, it's going to be Apple, Apple, Apple. Keep in mind, you know, the stock sold off pretty hard the last couple of weeks into earnings. So we had that big run. Apple sold off. Fears of, you know, iPad sales slowing down. This is a classic case of sell the rumor and buy the news. But let's also not forget that tomorrow the Fed's going to come out with their commentary. Clearly, they're not going to raise rates, but the commentary is going to be very important, as well as the new post-Fed meeting press conference. And the markets are going to be looking for any hint of the Fed floating the QE3 trial balloon or something to that effect. They're clearly going to downgrade their view on the economy and maybe try to target inflation a little better. So tomorrow is going to be a lot of fun in the U.S. market.
Paul, I was just coming to that. What are markets expecting from the Fed? Are they expecting a more dovish commentary this time around, or are they hoping for that?
The economic numbers, as everybody knows, are so volatile day to day, week to week, and month to month. Yet, once the Fed in 2008 began their rescue, their backstop, every single week number, the markets are back to focusing on help from the Fed, help from the Fed. So I think clearly, you know, given how poor the April unemployment number was, or the lack of more job creation, I think that the Fed's going to be a little more dovish. But keep in mind, this is the most divided Fed clearly in the modern investing era. You know, you've got Bernanke and Yellen on one side, and you've got Coach Lakota and Fisher and Plosser on the other side. So it's going to be really tough to push through a gigantic Fed program right here. I think the Fed's going to jawbone the markets a little bit. Bernanke's going to say what he's done a masterful job of, and that is, in case the economy falters, the Fed is going to be here, and we're going to watch and wait and react when the news dictates.